And welcome into Making Sense. Have you ever heard the term that maybe you are insurance poor? Well, sometimes as you start to look at that register on your checkbook and say, wait a minute, I just wrote these people a check for this. I just wrote these people a check for that. Well, you know what? Insurance is the good news, bad news. The good news is you need it and it's there. The bad news, it's continually rising, and maybe you need a little advice in that arena. Today we have Brandt McDonald, Barranco, Hagen Wealth Management.
That's right.
Good to have you back. And the
Pleasure
subject today, buddy, is insurance. And I know that I'm a little bit older than you, quite a bit actually. And of course, I'm on Medicare, and then I have Part B, this, that, and I'm still paying a lot of money in insurance.
Yeah. I tell you, Jack, every day when we meet new clients or we do reviews with our existing clients, the subject of insurance is always coming up. It's just one of those things that's unavoidable, because when you think about it, everyone has to pay automobile insurance, or you have health insurance, or you've got life insurance, insurance on our homes, whether it was property and casualty. And so one of the things we try to do in terms of education with our clients, and I'm very passionate about this subject, in my 25 years of managing money and advising clients, the way that I try to communicate this is to think about it from the standpoint of your personal balance sheet. Corporations have balance sheets, small businesses have balance sheets, even individuals have balance sheets. And it's incredibly important that you manage that balance sheet. You need to step back and look at those assets and liabilities. At our firm, when we do our wealth management plans, retirement plans, and that type thing, we're constantly looking for ways to mitigate risk. How can we reduce the risk to our client's balance sheet? So we're trying to analyze where on the grand scheme of things do we see potential gaps or risks on their balance sheet, and how can we transfer that risk from our client's balance sheet to a much larger balance sheet. And in order to do that, you're paying a much larger balance sheet, a premium, if you will, to take on that risk. And so in my world, the way I view it is I try not to get too confused about this, and I don't want my clients to be too confused or overwhelmed by it. It's really a very simple calculation. It's mathematics. It's algebra 101. It's, give me a certain set of variables and I'll solve for X for you. So the question really when it comes to insurance is, what is the gap? What's the quantified risk that I have identified on my balance sheet, and what's the least amount of money that I can pay to someone else who is a credible sort of counterparty, if you will, that can absorb that risk for me? And for what period of time do I need to do this? So in the case, for example, on life insurance, we see this one all the time. Sometimes clients come in and they have these exotic products or things that they've been sold, and they really don't even understand what they have. So we are all the time doing reviews of life insurance policies. We ask the client to bring in their life insurance contract. We sit down, we do a review of it, and we're trying to help them understand what they're really paying for. Typically, I'm on the side of the table that says, let's don't confuse investments with insurance. I mean, insurance is a very simple concept. If we have a large wage earner in the family, whether that's a husband or a wife or both, and that family could not do without that income, then let's solve for X. How much money needs to be injected into that estate in the event of death that can replace lost income? If we have a balance sheet item where we have debt or some sort of leverage that was used to purchase an asset, typically a home, then what would happen if we could no longer service that debt, and how would we be able to get out of debt or pay those debts off? Or even future liabilities, things like a college education for a child. So we quantify all of those cash flow items or all of those balance sheet risk items, and we come up with a number, and we say to the client, Mr. and Mrs. Client, this is the gap. This is how much you need, and then we try to say, what is the cheapest way to go out and solve for this problem? And it's a really very simple exercise. So I think, insurance is a really interesting thing. There are a lot of people in the insurance business. Most of them are fine people, and I know a lot of them here, particularly here locally. But I think for me and my business, that seems to be one of the real misunderstood areas and often overlooked areas. And I can tell you that the insurance industry has changed dramatically just in the last 5 years. And there are a lot of people who have older policies and they just forgotten about it. They just keep paying those premiums, and they really don't understand just how unique and how different the industry is today compared to where it was even 5 years ago. And so we're doing a lot of these reviews of all types of policies to make sure that our clients are positioned properly.
Well, good. Well, listen, we appreciate that, and we need to let our viewers know, just remember this, just because you've got the insurance, you may have gotten it 25 years ago, doesn't mean it's the same. You know, it's not like it was 25 years ago. As Brandt said, things are changing. Insurance companies are starting to be able to keep up with what's happening in society, especially from a financial standpoint. So if you have any questions, make sure to give them a call. They can give you the right answer. And we'll be right back right after this.